Good morning, everyone, and thank you so much for joining us on today's panel. We've got a really diverse topic to cover, so let's see what we can get through. Todd, I might start with you. ESG has gone from nice to have and now it's a must have when they're de-risking investment decisions over the years, and the bar is continually being raised. How has this affected Australian companies' ability to raise capital?
Yeah, thanks, Jody. It definitely is. The bar is raising. ESG is clearly an important matter and really at the forefront of thoughts for many companies and their investors. So as you work through this, I think it's really interesting though, different people have different views of what is ESG and then really how do you measure this ESG success. And so for this, I'll try and take you through a couple of examples from a Whitehaven Coal perspective. For those who don't understand our business, we're Australian ASX listed, 4 mines, about 20 million tonnes a year of premium export coal production. And we've got 2 growth projects, Vickery and Winchester South. We're also a company that's proudly local with 75% of our over 2,000 strong workforce living locally. And we've got our workforce is over 9% identifying as Indigenous. So with that as a bit of a backdrop, let me share an example of what it's doing at a project level or what we're doing at a project level, and then sort of take it back up to the corporate level and funding. A good example is really how companies engage with stakeholders. So for Whitehaven, within just a few months of our purchase, we were able to not only meet and engage with all key stakeholders, but we also reached formal agreement with our traditional owners, the Barana Barna. And really not by good luck or chance, rather Whitehaven has embedded an industry awarded reconciliation action plan, capturing many Indigenous initiatives. And as this is embedded throughout our business, quite keen to replicate this early as we moved north into Queensland. It's not just Whitehaven, the Barana Barna should be equally commended for their proactive engagement through this. So just a small example at a project level, but if I go up a chunk let's talk about the corporate level. The focus really is shifting around sustainability reporting with a specific focus on climate related, the ESG type matters. So as this bar that we talk about rises, so do these corporate reporting requirements. Companies are now required to test for resilience in this new carbon constrained world. There's a new reporting mechanism formerly called TCFD, Task Force for Climate Related Financial Disclosure. I have to say it's slow and it's hard to remember the acronym, but the TCFD will become the new norm. Whitehaven Coal has recently completed its maiden TCFD response as part of its sustainability report. And this has been very well received by our shareholders and funding groups alike. So if I come back to your original question, how has the ESG affected the ability to raise capital? Well, funding is definitely still available for the right companies and the right projects. And Whitehaven, again, is a good example of this. We've just refinanced over $1 billion of debt in just February this year, with support from international and Australian banks. And earlier speakers, not on this panel, but on earlier panels, mentioned that the banking sector is becoming very, very bifurcated in a pure sense, becoming non-coal or coal lenders. And I think this is true, but what we do note that for every Australian bank that does not participate, what we see is new international support being presented, particularly from the key customer markets from Japan, Korea, China, and also other areas. So this trend is embedded, and I think it will continue to, expected to continue. If I bring this back though, just to wrap up, I think this panel is all about small and mid-tier coal miners. Whitehaven's example that I've shared should be recognised at the upper end of that spectrum. I would imagine the ability to raise capital is a little bit harder if you're smaller, or if you're a company that's new or without lending history, or equally those that without the ability to really resource these very important ESG matters. So I look forward to further insights from other panelists in this regard. So thank you.
Thanks, Todd. So Michael, I might go to you now, given your experience in small to medium. How are the Queensland small to mid-tier coal miners viewed in investors' eyes, or is there too much risk in the current environment?
Thanks, Jody. No, I think I think looking over the last 10 years, there's been a significant change in investors in the coal industry, and we've seen a real transition, and seen the exit of Rio Tinto most notably. But I think as Todd said, there is a bit of a bifurcation in terms of banks and debt funders, but also particularly in equity investors. And I think if you look at the most investments over the last 5 years in Queensland and in New South Wales, it's been, I guess, you'd label them the true believers. There are people that have experience in coal, have been in coal for a long time, and I'll use Whitehaven as an example in Queensland, that they picked up Winchester of the Rio assets, and the other purchasers of those Rio assets were people that are true believers in coal, like Glencore, and also I guess in particular at Kestrel, we saw Adaro invest in that project with EMR. And I think it's interesting, in particular, I guess 3 of the larger, more recent investments in Australian coal have been by Indonesian miners: Adaro, Salim Group at Mark, and more recently at Stanmore. The takeover of Stanmore has been done through Indonesian mining interests. And I think we're also seeing new investments or new greenfield development are by people who are involved in have a long history in coal. For example, at Carabella is being done. Bluff is being developed by Carabella, which is owned indirectly through China Kingho Group, which is a long history in coal and coal chemicals in China. And we're seeing similarly in other projects. Sojitz acquired the Gregory project. Obviously, Sojitz has a long history from being a trading company to being a producer and developer. And so I think the group of investors now is very much people with substantial experience in coal. The takeover of Curragh by Coronado, they are coal investors. And so I think we're going to see less of the diversified mining companies because they are under pressure from an ESG perspective, and we're seeing more pure coal play. And I think we're now seeing more sort of juniors and independents being developed. I think the age of the big greenfield projects is tough, and obviously Adani have had a lot of difficulty, unfortunately for them. But I think we will see smaller greenfield projects being developed, and that is because there are funding challenges for projects, but also they are more manageable for smaller and junior independent companies that can be nimble to pick up some of those opportunities.
Yeah, great. Warwick, from a government perspective, we talked about the raising of the bar in terms of ESG, and in Queensland there's a really huge focus on social licence and gaining community approval. How has this influenced the regulatory approval process in Queensland?
Thanks, Jody. It's a really interesting topic, and I think if you look over kind of the last decade, 15 years, you've seen huge investment and progress from an industry perspective. Initially the social license concept, and then through to the ESG concept that we're talking about today. But I think if you look at the feedback across the globe, social license continues to be right up there in terms of greatest investment risk to industry and risk to project success. As a regulator, as government seeking to balance those sometimes competing economic, environmental and social considerations, we've been grappling with the notion of social license, particularly from a project approvals and regulatory perspective. I think one of the really important influences here also is that community dynamics are changing. We're really seeing a more engaged community. They're more involved in community issues than ever before, and they're very well organised, much more so than in the past. And if you look at the trends in mainstream and social media, it means that we've got communities and individuals have a lot more access to information about resource projects. They're more visible, and interested parties are able to influence and potentially reframe community attitudes. But ultimately, those communities are after transparency and decision making and the ability to engage with companies and decision makers. So I guess that's where we come in from a regulatory perspective. And look, we have seen that regulatory approvals process evolve in line with these community expectations. I think particularly in terms of stakeholder participation, but also in terms of the range of considerations that government has come to terms with when considering new projects. Again, I think that's in line with community expectations. We've moved from what was at one stage maybe a simple regulatory framework around tenure and environmental approvals, maybe an objection process, through to a process now that considers a wide range of potential impacts for projects, social impacts, complex land use planning considerations, groundwater, cumulative impacts. These are all things that have evolved and been added to the regulatory framework over the years in response to those changing community demands of government. And obviously that's made the regulatory landscape a bit more complex for companies to navigate, and in some cases more lengthy and costly. But it's also important to note that shifting and evolving regulatory framework can reduce certainty for industry, and that can sometimes play out in terms of a reduction in attractiveness for investment. But I think ultimately, from a regulatory point of view, those companies that invest early in relationships and community engagement, Todd referenced before the effort that Whitehaven have gone to in terms of their community engagement activities and how that's been an important part of their success. I think it's that early investment, whether that's at the exploration stage or when acquiring projects. Those companies that have that eye to engagement, I think, are the ones with an eye to the future. They understand the interaction with the community and how that can influence the regulatory approvals process going forward. If the community's on side, it's much easier to navigate an approval process than it is if they're not on side. There'll always be those elements of the community that are not impacted by the project but seek to influence, but they can be in some way circumvented through that local community support. I mean, as a government, we're always looking to engage with communities so that to make sure they understand what the regulatory framework looks like, how we're regulating these activities. So that's another, I think, role for government, particularly in terms of the regulatory framework and the success of industry, particularly the coal sector, which is working with a new narrative, I think. But look, overall, we have seen a definite response to social license and ESG in a regulatory context. I think that direction, and I think it will continue to evolve. Community expectations aren't lessening in terms of transparency and accountability for government in terms of regulation. But I think the challenge for us is how do you get the balance between a streamlined regulatory framework and also that certainty for industry and the community that we are managing impacts and opportunities.
Yeah, I agree, Warwick. Nairi, you having worked in approvals for such a long time, and you've seen the change and new acts brought in, and it must be exceptionally challenging for you as well in your position. If we talk about activism, and Warwick touched on the fact that people are a lot more, information is more accessible. You've got more of a voice in communities, which then sometimes brings in that activism sort of arm. It's having a huge impact on environmental policy. Our community response to mining. Do you think the Australian mining industry have got it right, or is there room for improvement and some more balance between the approvals and the community?
There's always room for improvement. I'll start with that. I think to understand the areas that we can work on collectively as an industry and with our regulatory agencies, we need to understand what activism is and really define that. People now are, I should preface this with saying I've done a lot of research. Never ask anyone what their thesis is about. That's mine. Is all about environmental activism here in Australia and particularly Queensland. So through my research, we've really established that we are living in an era of activism. People identify as being an activist. You'll see it on their LinkedIn profiles. You'll see it on their Facebook. That's what they do for a living. They feel passionate about causes, etc. What we see is in the last decade, there's been a significant change towards activist movements, which is a very different thing. What you find is you might get individuals in a community that are not so happy about something that will sign on to this movement and might not understand the fundamental issues or the drivers behind that movement. People have touched on Adani, and if you go and have a look at the movement associated with that, it's actually many, many different groups jumping on the same cause. It's like a flashpoint. And I think our regulatory system is an excellent system in that it channels that natural human condition for conflict there will always be conflict. That's what our regulatory and our legal systems are designed to do. But where we perhaps get overwhelmed is where you get that flashpoint and you're getting a global movement tapping down into a local issue. So in terms of that, where industry can really help is we can work to identify that early engagement with our communities, which everyone has said is really important. Engagement with our investors, awareness in the project proponents of what needs to be addressed. We can't just not talk about the difficult subjects. We need to be upfront. We need to be having those conversations early. We also need to be very active in our communities in identifying where there is that underlying ripple of fear through the community, because that's what we're seeing is the biggest driver for people to get up off the couch and invest energy and effort. They're frightened. So we need to tap into that and really help them understand what's going on. And a way that we can do that is support them with technical knowledge. These communities they don't have hydrogeologists that specialise in groundwater. They don't necessarily trust the party that's coming to them saying, look, we've modelled it and that's fine. Government has limited resources as well. So we really need to look at how can we support these communities so that they don't necessarily turn to activists with pretty big agendas, and help them make some pretty clear decisions and be informed.
Yeah, no, great, Nairi, thank you. Todd, you touched on this earlier, but I'll throw it out to everyone. You know, with the changes in approval, and the focus on ESG and the raising bar, how are the small to mid tiers adapting and demonstrating their commitment rather than just being a tick box that they can put out as we do this, we do that? How are we doing that? MG, do you want to start on that one?
Sure, absolutely. I think the approach, and particularly, I guess taking Bluff as an example, the approach we've taken is sort of hitting on Nairi's point, is we've really tried to keep it local. We wanted to address the local issues because whilst there is activism against coal in particular, the issues that we face, you know, are being part of a community. And Bluff is a project that is close to a town, and so that's probably, you know, pretty particular for us. So we have really sought to engage very heavily with the community, and looked at what concerns of the community are, and to really try and address, I guess, beyond compliance, not just meeting the mere compliance requirements of the regulatory environment, but if there's additional noise or dust monitoring or additional things that are required by the community to address concerns, and we've sought to try and do that. And I guess as part of that, you know, seeing that the project is integral in the community. I mean, it's a town with a long history of coal mining and rail, and it's a heavy in the middle of the Bowen Basin. But we've sought to ensure that, you know, people identify with the project, and particularly the benefits that the project can bring. I mean, the project is, you know, I'd say it's Queensland's smallest coal mine. We've just mined our millionth tonne, but we've, you know, made a net contribution, I think, in total revenue and royalties and taxes of about $25 million in 18 months. So there are substantial benefits with 220 employees, and you know, but importantly, we've moved 12 families have moved to the town. The school enrolment has tripled just in 12 months. And so it's really trying to engage with the community to add those things. Yeah, and I guess the other element that we have sought to do is to sort of maximise the benefits. I mean, we have a strong regulatory process, which can be challenging, but you know, I guess we're trying to maximise the benefits of that. And you know, environmental offsets are one case where we are doing offsets. And we have reached agreement with the Woorabinda Aboriginal Land Council to undertake offsets on their land. Creates a mutually beneficial outcome. Most of the people at Woorabinda, or most people from our cultural heritage traditional owner group, have origins from Woorabinda or now Woorabinda, and so we've been able to engage them with it. You know, it's a net benefit to us in terms of the offsets, and it's a benefit to the Woorabinda agricultural group as well. So yeah. I think we've sort of certainly really, and that's not just purely meeting compliance, but we've gone beyond the compliance to try to address what maximise the benefits of the project as well.
MG, we actually have to say goodbye. We've got 10 seconds left. Thank you, everyone. We could talk for hours, but we'll have to pick up next time. Thank you so much, everyone.
Thank you. Bye.
Thank you.